And so yesterday, actually, I was valuing Nvidia for myself, for my decision making. And it's part of a 2-week process I've been going through. And the big thing with Nvidia is, what will AI bring to Nvidia's value? And I tried to value the AI component of Nvidia. So I made my best estimates given what I could find out about how big will that market for chips be.
Hi everyone, welcome to Clone Compounding, where our mission is to learn from others in order to achieve financial independence.
In this video, let's look at the summary of Professor Aswath Damodaran's latest views on the Nvidia company. The stock is up nearly 200% so far this year. This is part 2 of a 2-part video series on this topic. For part 1, please look at the description below. Before we start, please smash that like button so others can find this video as well, and make sure to subscribe to receive next videos. In part 1, we covered Professor Damodaran's views on semiconductor, the business, Nvidia, the opportunist, AI, from promise to profits. In this part, let's focus on the 4th section, which is Nvidia valuation. Nvidia valuation. As we look at Nvidia's growth and success in the last decade, and its recent ascent into the rarefied air of trillion-dollar market cap companies, there are 2 views that come into play. One is to extrapolate the past and assume that the company will continue to not just succeed in the future, but do so in a way that beats the market's expectations for it. The other is to argue that the outsized success of the past has raised investors' expectations so much that it will be difficult for the company to meet them. Professor Damodaran considers both views in his evaluation. The driver of Nvidia's success has been its high-performance GPU cards, but it is very likely that the businesses that bought these cards and drove Nvidia's success in the last decade will be different from the businesses that will make it successful in the next one. For much of the last decade, it was gaming and crypto users that allowed the company to set itself apart from the competition, but the bad news is that both of these markets are maturing, with lower expected growth in the future. The good news, for Nvidia, is that it has 2 other businesses that are ready to step in and contribute to growth. The first is AI, where Nvidia commands a hefty market share of what is now a relatively small market, but one that is almost certain to grow tenfold or greater over the decade. The other is in the automobiles business, where more powerful computing is seen as the ingredient needed to open up automated driving and other enhancements. The value of a company is a function of 4 broad inputs. First, revenue growth. Second, target operating margin. Third, reinvestment. Fourth, cost of capital. While all of NVIDIA's different businesses, AI, auto, gaming, share some common features in terms of gross and operating margins, and required R&D for innovation, the businesses are diverging in terms of revenue growth potential. Based on the analysis by Professor Damodaran, the value per share for Nvidia as of June 2023 is about $240, well below the stock price of $424 that the stock traded in early July 2023. To the question of whether Nvidia could be worth $400 a share or more, the answer is yes, but the odds, at least based on his estimates, are low. An alternative look at what has to happen for NVIDIA's intrinsic value to exceed $400, he looked at the 2 key variables that determine its value: revenues 10 years out and operating margins. In his analysis, there are possibilities where the current price is a fair value or undervalue, but these paths require a daunting combination of extraordinary revenue growth and supernormal margins. A target margin of 50% is pushing the limits of possibility in the semiconductor business, and if Nvidia finds a way to deliver value that justifies current pricing, it has to be through explosive revenue growth, at least $400 billion in revenue by 2033. Put simply, you need another market or 2, with potential similar to the AI market, where Nvidia can wield a dominant market share to justify its pricing. Professor Damodaran ends his review by sharing that he loves Nvidia as a company, and have nothing but praise for Jensen Huang's leadership of the company. While some may argue that Nvidia was lucky to catch a growth spurt in the gaming and crypto businesses, a closer look at its successes suggests that it was not luck, but foresight, that put the company in a position to succeed. His valuation story for Nvidia reflects all of these positive features, and assumes that they will continue into the next decade, but that upbeat narrative still yields a value well below the current price. He says he would be lying if selling one of his biggest winners is easy, especially since there is a plausible pathway, albeit a low probability one, that the company will be able to deliver solid returns at current prices. He chose a path that splits the difference, selling half of his holdings and cashing in on his profits, and holding on to the other half, more for the optionality that the company will find other new markets to enter in the next decade.
For now, that's it from us. Hope you enjoyed and learned from this video. Smash that like button and subscribe to receive more videos on memos and write-ups from top investors.